copper ended the week at $5.26 per pound, and the US dollar index closed at 98.98, continuing its slide beneath key support. Tonight begins our very first copper forecast. And the timing couldn't be better, because copper is entering a tightening cycle that could define the next decade of global industry. Let's start with what happened this week. Copper strengthened early as global inventories continued to shrink. Shanghai Futures Exchange, also called SHFE, the main metals warehouse system in China, fell below 55,000 tons. The London Metal Exchange, known as LME, the world's primary copper marketplace, sits near 150,000 tons. Combined, these levels remain far below what a healthy copper market typically carries. Meanwhile, industrial demand remains strong. EV orders continue rising. An EV, or electric vehicle, uses up to 4 times more copper than a gasoline car. Grid upgrades are accelerating in the United States and Europe. And semiconductor fab construction, one of the most copper-intensive building categories on Earth, is expanding worldwide. Add to this the ongoing challenges inside the mining sector, lower ore grades, aging mines, and very few new discoveries to replace what's being depleted. That is the backdrop behind this week's price of $5.26. And it's why this level is not a spike. It's a signal. And a key new development, the silver-copper connection. One trend we need to highlight, because it's becoming too important to ignore, is the tightening relationship between silver and copper. This year we've watched precious metals re-rate sharply. Gold from 2,000 to nearly 4,000. Silver from 30 to 60. Platinum from 800 to roughly 1,600. Now that same mindset, the hard asset debasement trade, is moving into copper. Why? Because silver and copper share the same major drivers. Both markets are in structural deficits. Investors remain underweight compared to gold or equities. CME arbitrage and EFP activity are tightening global supply. And metal is increasingly being onshored into the U.S. for strategic stockpiling. Together, silver and copper are reinforcing each other, strengthening the broader metal cycle. This is a major shift, and we'll be tracking it closely in every copper forecast going forward. The 3 leading indicators we're watching. 1. The US dollar index, DXY 98.98. Copper trades globally in dollars. So when the dollar weakens, copper typically rises. DXY closing at 98.98 keeps it below the psychological level of 100 and below the technical line at 99.50. If DXY pushes down toward 98.50 or even 98 flat, copper could see another move higher as global buyers face less currency pressure. 2. Global inventories. SHFE approximately 55,000, LME approximately 150,000. Inventories are the heartbeat of the copper market. Low levels force buyers to compete for limited supply. High levels calm the market. Right now, SHFE near 55,000 tons and LME around 150,000 tons are both historically tight. A normal, comfortable combined inventory would be above 300,000 tons. We are nowhere near that. If stocks fall even 3 to 5% next week, traders may front-run a short squeeze type rally. 3. Industrial demand momentum, EVs, grid upgrades, semiconductors. Demand strength continues to build. EV manufacturing remains one of the fastest-growing copper consumers worldwide. Grid expansion in the U.S. is projected to rise almost 10% next year. And semiconductor construction, from Arizona to Taiwan, involves massive copper cabling and high-power infrastructure. If EVs, grid upgrades, and AI data centers continue trending upward, copper demand could outrun supply for years. Secondary indicator, Fibonacci levels. We also use Fibonacci retracement levels as confirmation. Copper is currently trading above the 38.2% retracement from the summer pullback. If price breaks through the 61.8% zone on strong volume, the next extension points align with the 550 to 560 region. Fibonacci won't drive the forecast, but it helps identify whether momentum is strengthening or fading. Okay, here are the clean copper price predictions for next week. December 8th to 12th, 2025. Based on a weakening dollar, tight inventories, strong industrial demand, rising macro momentum, and the strengthening silver-copper correlation. Here is the rhythm of the market we expect for the coming week. Base case: copper trades between $5.28 and $5.38. Upside scenario: if DXY continues to weaken and inventories fall again, copper could test the 540s, possibly $5.45. Downside scenario: if the dollar unexpectedly rebounds above 99.50, or if inventories rise meaningfully, copper could revisit the 5 to 10 to 5 to 15 range. Our leaning: upward pressure, momentum, fundamentals, investor repositioning, and the silver-copper reinforcement effect all support continued strength into mid-December. Final word to the community. Before we wrap up, we're excited to announce that Copper Forecast and Silver Forecast have officially teamed up with APMEX, a trusted online precious metals dealer with a great selection of copper rounds, copper bars, and of course, silver, gold, and many other metals. You'll find the APMEX affiliate link in the description of this video. Also, don't miss our special report showing how both copper and silver could surge when Samsung begins producing its solid-state battery EVs in 2027, a technology that could transform global metal demand. Tap the link on your screen. We'll see you over there. And as always, we'll be here every Sunday with a brand new copper forecast. And throughout the week, stay tuned for breaking news and special reports from Silver Forecast. Thanks for being here. This is only the beginning.